Hello, everyone. Happy Thursday. Hope everyone had a nice little break from the markets yesterday. If you celebrated Juneteenth, I see Sterling is back to work. That was a really short vacation, Sterling. Boy, did you even get a full week? I don't think so. Who do I got to talk to about that? Good morning, Patrick. Good morning, John. Sterling back with the news. Thank you for putting that in. Oh boy. Oh, okay. Sorry about that. Oh, we got good news in here. Account deficits. We had the jobless claims come out. Nothing shocking with them climbing slightly higher slowly. What else? Okay, nothing we need to talk about there. But thank you for putting it in, Sterling. This is interesting. To afford a monthly mortgage payment, middle class Americans need to put more than 127 down. And what's that on what size house? The average house. I mean, stuff is just nuts with housing still. And buyers aren't really willing to cut prices that much. Again, there's houses in this neighborhood that I'm renting in that have been vacant. They will not lower their rent, and they've been vacant now since I moved here. Wouldn't you at least try to get somebody in there? But people are stuck on their price. And also, rents are still too high. That's why houses are sitting open. But if you want to buy the equivalent house, you literally, to get the same mortgage payment as the rent, you have to put over 50% down. So why would you? People still can't afford these higher rents, and to buy it, and there are houses for sale in this neighborhood too, you have to put 50% down to get that even elevated rent payment. Why would you do that? It's absurd. Something's going to change, but until then, it's going to keep on going. Keep on going. A medium household income would need to put 35.4% down to afford the payment on a typical U.S. home. And they're still approving people at 56% of your take-home pay. Do you want to put 56% of your take-home pay towards living in a house? No. Something's going to give at some point. But you know what? The melt-up continues in everything. And there are houses that are just sitting there. There are so many stale listings here. Stale listings, something that's been over 30 days. And they're not, some people are starting to cut, but like, okay, I'm going to cut $5,000 on a $2 million property. Are you serious? I'm going to cut $1,000 on a $1 million property. I saw a couple of those yesterday. I'm going to cut $1,000. Your property's been sitting there for 62 days. You think your price reduction is $1,000 on $1 million property? Typical home is affordable to a typical medium income household with 20% down in less than 10 of the 50 biggest U.S. markets. Exactly. Good morning, Jacob. Hello, Charles. Good morning, Royal Palms. Don't forget the thumbs up. Thank you. Sunday through Wednesday was your vacation. We'll have a week off in July and a week off in July. I'm glad you get some more vacation time, Sterling. Good morning, Martinez. Where do we sit? Good morning, family. Live in Naples, Florida. Same thing happening there. There's so much. There's more so in Central Florida. Thank you. Good morning, Legion Reaver. Blinded by the opportunity cost. All right. So we'll see. Still just patiently looking. By the way, remember the real estate August 17th also, because of the lawsuit against the National Association of Realtors, you can't have buyer agents fees listed. I was actually listening in on a real estate meeting last night for brokers. It's going to get interesting too, because you can't list sellers or buyers fees, and now the brokers are talking about, well, buyers are going to have to pick up the fees starting in mid-August, so they'll roll them into your mortgage. So it's going to just get interesting, or buyers are going to even revolt more, which I think is going to happen. But we had building permits breaking down Building permits continue to drop. Housing starts continue to drop. Jobless claims slightly higher. Philly Fed numbers coming out. Prices paid still elevated. New orders slightly better than last time. And employment slightly better, but still negative. So you have prices paid still elevated and new employment and orders dropping. And that's a regional index only. Just stuff to sit up and take notice of. The EIA numbers are today because yesterday was Juneteenth. And we got some 4-week, some 8-week bill auctions. We got Barkin speaking after close. I saw Kashkari speaking this morning. Still thinks 2 years to get to 2% inflation. You know, this is crushing middle America. This is literally crushing it. Tomorrow, the big thing, other numbers, is the 5.1 trillion, largest quarterly OPEX ever. S&P 500 map, NVIDIA, still just chugging along. Look at NVIDIA, up almost 3.4%. So that's still chugging along. Largest company in the world right now, just unstoppable. The Meltup Continues. Groups, one more quick refresh. Technology, energy, basic materials leading. Industrials and healthcare are the only thing that's lagging, but technology is driving everything forward. Fed Watch still has one cut poised for September potentially. Fear and greed still in fear mode. Schiller PE 3573, nosebleed territories. What could go wrong? Well, nothing in this. Probability, this is great. Don't know if anybody saw this from Isabel Net this morning. Probability of U.S. recession is priced across asset classes. The S&P 500, a 0% probability for a recession. Oh boy. Source, Bloomberg Finance and JP Morgan. A 0% high grade credit is only at 2.1%. High yield credit is only 2.2. You can start getting the 5-year U.S. Treasuries of 35. Base metals, I don't know how they're getting that 47. Russell 2031, but the S&P has a 0% recession chance. And household stock allocation at an all-time high. We just exceeded the all-time high. Now, what happens if, I really want to know over the next couple of years, what happens if the stocks top out and start dropping pretty rapidly and you get housing dropping rapidly? You got a lot of boomers counting on the stock market and housing market. I'm wondering, but stocks at an all-time high with the markets just chugging on. Not saying there's no short signal yet. There's no topping signal yet, although wedging signals for tops are really hard because they can shift suddenly. But there's no like double. Now we are still at the end of potential DeMark and DeMark sell setups and that have not triggered. Nothing's triggered. Remember, you gotta wait for stuff to trigger and potential Elliott wave setups, but nothing's triggered. And the market can keep marching higher. We had Winnebago miss this morning. So that missed, but Kroger was a beat. And really just have CarMax tomorrow. So there's your NVIDIA gapping up to 140 looks like this morning. Let's take a look at the S&P. And we got, here's your wedge patterns. Again, there's your weekly. Just wedging higher. But you don't really start doing even minor technical damage until you start getting back below 5,300 roughly. Even minor technical damage. So can it keep going? Yeah. We're in full-blown cocoa mode. We'll call it cocoa mode. All right. Price target for NVIDIA at this point, it's trail mode. I can't even get a pausing bar to get a good price target. It was 138. We're going to gap above there. Don't have one yet. Because we can't even get good pausing areas, all this supposes stability with VIX being super low. Remember, the VIX doesn't matter anymore until it does. Good morning, Christoph. NVIDIA's recession proof. Did anybody listen to yesterday where I said I recommended watching Adam Taggart's Thoughtful Money, the one on AI? Did anybody watch that? If you didn't see my episode yesterday, I recommend tuning into there. Just do a search on Thoughtful Money, Adam Taggart Thoughtful Money on YouTube, and watch his one on AI that came out, I think, on Tuesday. So that's a good morning, Heinrich. Good morning. All right, where do we sit? We had a little reversal after the numbers came out this morning. Not quite to that 55.95 area, so that's still the target on a continued rally. That's about the only target we have left. Pulling back, going to keep watching this 4-hour rotation zone, pulling into anywhere between roughly this 55.70 to 55.65 is the first level of support. If we drop below that, the major is about 55.45 to 55.50. So there you go. That's where it sits. You can see that key support level right in here on the 1 hour also. Other than that, we'll be seeing if it just wedges higher into tomorrow. By the way, if it gets above 55.95, the next target is 56.36 area. But here's what I'm saying. You see this wedge formation? Why I like doubles better, and you don't always get them, because this can have a sharp sudden drop, which means then I got to watch for a secondary reaction. At least a double I can plan. This does not give a fantastic stop level. That's why I'm keeping an eye on 5,300. That's why I'm keeping an eye on 5,300. And the daily rotation zone, the why 5,300 also is because that would take it below the daily rotation zone. The bottom of the daily rotation zone is back at 5,400, by the way. What else do we get? It's good. I'm split on the issue. I think AI is more significant than he thinks, but it's overblown. We'll see. We will. I think it's overblown, but it's not even. You're not even debating that, Eve. It's like AI is going to be some savior and going to do some, and all these chips are going to make a huge difference. So what if it's like, the internet wasn't going away, but and AA is not going away. But the internet took a lot, and the comm stuff with all the fiber and everything. They overbuilt so much fiber and so much internet capacity back in the .com. So they're doing the same thing now. They're overbuilding capacity. Not saying it won't continue to progress, but it's like this mad, let's buy up everything AI, and you still don't have what's the revenue source? It's fascinating. It's fascinating. So, where do we sit right now? The Nasdaq's trading right now at key support, roughly about this 2240, 250 areas. If it does drop below there, 2150, 20,150 is next key level of support. The bigger support, the major support is coming back at 19,820. The next level up is 2525. 20,525. The Dow, still no close above the 62.5, still watching 39,425, and also the Dow still in the rollover zone. Gonna keep close eye on that. So, not much really to talk about with the Dow. The Russell, watching for the next rollover play, especially after OPEX. Key resistance is really right around this 2060 area. Support is coming in at 2036. Right now it's in no man's land. The VIX, mid 12 handles. Just bumping this up a bit. Just above 13 gets me more so into sell-off mode. A drop back below about 12.20 gets me more so in bullish mode. Other than that, short-term levels, nothing with the DAX. Still watching for the next rollover play in the DAX. Still, the magnet price is a 17,785. The notes trading back to key support 110.10. So let's see how this ends the quarter. Again, we've triggered that double bottom, but not even to the first target yet. And the yield still somewhat interesting. We do have a mini double bottom. Now this could turn definitely into a channeling double bottom. But that's what I'm watching, especially if we get a close above 4.30. Dollar index. Come back to key support, tested it the last 2 days. See here, last 2 days, and now moving on up. Got to get above 105.20 in the short term. But with the rising rotation zone, remember we still technically did not get the close above the 62.5. So today I'll be watching a close above 105.11 to see if that happens today or not, to shift the probabilities. Crude continues to just grind. Look at this grind of crude. This is reinforcing the 79.60 is now getting into very significant support. 79.60 with the rising rotation zone. So this could get interesting. This could really get interesting. Now 81.95 is the next key level. It's got to close above higher. Now it is very overbought on the daily and cycles at the top, but weekly is still climbing. Also, if we start getting that close above that 62.5, I'm going to be paying attention to the highs back from April. Because is it trying to make higher lows? And that could lead into some more sticky inflation. Gold, we lost the double pattern potential because it never set up before it became invalidated. Paying very close attention to this 2360 area on a closing basis. Copper, now I'm watching for a bounce and then the next potential rollover play. Nothing set up yet though. Yen continuing to march higher. So all that yen intervention is getting erased again. The Japanese central banks cannot be happy with this. Magnet price 159.18. By the way, the Swissy surprise cut overnight, surprise interest rate cut. So Europe will continue to, looks like, cut. And the yen looks like it's going to continue to weaken until we possibly get another intervention. But it's back above the key closing intervention basis, not the high, but the closing intervention basis. So don't get caught off guard with that. Euro watching for the rollover play down, especially with the dollar gaining some strength. Spiders, 549.42, 550.50 is 550.56 is the next key level. Key support coming in about 548.50. So on any pullback today, we'd be looking for 548.50, which then the full gap closes to 548.49. But 550.56 is the next level. And you can also see the little wedge pattern here. It's not as good here because you can't draw it properly because of some of this price action. You have to sort of draw a best fit one. But you can definitely see it wedging up here. The Qs, again, we can't get proper pausing bars, but the next target is 498.11. 486 intermediate. Boy, intermediate levels. If we use yesterday as a brief or two, because it was a holiday yesterday, I mean, it's interesting enough because that gives a cluster. So intermediate levels 492.34, and then that 498 area. Those are the next key levels higher. Again, redrawing the wedge, looking to open 486.40. The gap fill back to Tuesday would be to 485.21. What else do we have? Oh, thank you, Sterling. Darden Restaurants beat on EPS, missed on revenue. Interesting looking chart. Thoughts? Kalani, AI is total. Well, it's not total BS. Not total. But I mean, it's just pile in the AI trade. Let's take a look at Darden Restaurants. Huh. I'd still have to favor a rollover in price action based on probabilities. I'd have to favor a rollover in price action and retest that weekly 200 over the next bit. And the 87.5, since we did close below at 62.5. Especially with weekly cycles going in the top and still below. Look at this. So nice, really nice support with the 200. Tested resistance, hitting that resistance area. So even with this slight gap up, I'd be watching for the next rollover play in this thing. Bitcoin, not much to talk about there. Still just triggered. You're getting selling pressure on rallies constantly right now, but unable to hit that first target. Not to talk about with Tesla. Nvidia, again, still opening above that 138.08. Whoa, this thing's gone nosebleed. Look at this. Look at where the monthly rotation zone is. All the way back at 90, 50. Wow, which is also a little positive breakout area. This is going to provide pain when it eventually tops, but there's no topping signal yet. There's no topping signal on any time frame. So the trend is your friend until it ends. All right, what else do we have? Have you seen what NVIDIA is building with their GPUs? It will basically be a machine that can self-educate and do research in any field. I think it's still overhyped. Overhyped. I don't even trust the CEO also of what he puts out there. But their GPUs are impressive. I'm not slamming that. I mean, they've always had really good GPUs. It's just getting to where it's getting insane. What is their 3.34 trillion? All right. Going into the open. So there's always a hype thing to follow, and it will keep going until it doesn't. It'll keep going until it doesn't. But again, we don't have any major sell signals, so the trend is still up. The trend's been up since it triggered those key buy signals beginning of November. So you got to keep trading with the trend in the short term. I think you got to be a little more cautious in the medium to long term, especially the longer term. It's going to be watching how this opens with the tick today and this getting in this 55.65 into the first opening print area. With that, I hope everyone has a wonderful day. We got the huge OPEX tomorrow, so we can easily keep melting up into that. Remember, very overbought, cycles at a top, pinned to the top on the daily and the weekly. And we still have weekly potential divergences. So just be cautious out there. Know where your key stop levels are for longs. Until then, my perspective is you got to trade with the trend until the trend ends. And I will talk to everyone later. Bye for now.